Is it time for central bankers to start thinking about normalizing? I know that's not the name of the game right now. We're still in ease mode, and in fact, we're now pricing in additional cuts. Would you prefer, though, from an investment management point of view, to see rates return to more normal levels?
Well, if I talk about Europe, yeah, I prefer a stable environment. And right now, what we have is a stable environment. We know that interest rates will stay where they are today, which is largely negative in terms of govies, for example, for foreseeable future. What I do not like is the fact that we are really in an unprecedented period of time where about 20% of the global stock of bond debt is carrying negative interest rates. It's like 11 trillion asking you to pay them to lend them money. When you think about it, it really is unprecedented. Now, how are we going to engineer this so-called normalization? I don't have advice to give to Mario Draghi. I don't want to put myself in his shoes. I think he has the toughest job right now in the world, and it's difficult to engineer that spur of inflation that has been hoped for some time that would allow the normalization of policy. I think the ECB has been very successful in averting the worst, and we have not had the worst in Europe, but the jury's still out on whether or not they can engineer the best.
So what happens once Mario Draghi exits the ECB? Because as you said, we might not be in the worst case scenario, but it seems that we might be building up to that pre-financial crisis levels when we're seeing some pockets of fragility emerging, especially in cases like Italy.
Well, I think when you think about the strength of the underlying strength of the European economy, it's not bad. In fact, we have solid companies that are exporting and that are benefiting from the growth that's around the world. Now, growth is slowing, no question, in Europe, as it is in the US, and perhaps somewhat also in Asia. Now, we have lots of political noise in Europe. Brexit, Italy for sure, the ability to reform the European Union, the so-called rise of populism that you might see in spurts and fade in Europe, and the results of the European election are probably, for some, a bit of a relief compared to what was feared. If you want to believe, as was mentioned a few minutes ago, in an undervalued euro, I think you believe in the fact that that political noise will abate, that maybe we will end up in a situation where we have an orderly Brexit, or what I've been hoping for some time, and even said publicly, I was believing that the market was appreciating the risk that no Brexit happens. I think today the jury is really on the side of Brexit will happen. It's not a question of only how it will happen. So if you believe that all these elements will abate, I think you could see the euro rebound a fair bit.
You are very optimistic, and that's that no Brexit scenario is another sign of it. I mean, I think what Shery highlights is really important, which is that this is a U.S. administration that's opened a new flank in the trade war, and that is currencies. And when we say maybe they're right, the euro is undervalued, the concern is that there's no end in sight to Donald Trump's willingness to put tariffs, to play with international trade. As an investor, what do you do about that?
Well, let's face it. It is a tweet and threat and back. So there's a bit of a noise game in all of this. No, you don't ignore it, but you don't try to react on the spot. In fact, we believe ourselves that we stand for active asset management, long-term looking. So if you want to be long-term looking, you don't react to a tweeting president. You don't react to short-term news like what we've seen recently. I think you try to decipher this and look towards the long term. What I do see in the long term, China, US, it's the classic debate between the established superpower and the rising superpower. And we better adjust to it. Tariffs is one aspect of this. It's not the only one. It's Make America Great Again versus Make China 2025. It's here for us to stay. And 100 years ago, it was resolved in a different way. Maybe I'll take tariffs over what was happening 100 years ago.